The big issue today is rents and rent control. Does the government want to keep you poor? That article and several different articles today on Real Estate Daily. Welcome, everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage market. Now, right off the bat, our producer, Emmy, is going on vacation for the next couple of weeks, and we're going to have very spotty coverage. I know. Blame her. I will leave a email link down below to complain to her. That's the complaint department. Yes, I get it. She is the lifeblood of this whole program here in the video, but we're going to tranche on through, hopefully, and see if we can get this done. So let's go jump right into it. First, why this is rent control policies are gaining support nationwide. Here's why economists still think it's a bad idea. Why do you think it's a bad idea? If rent control out there, well, first of all, we're in a capitalist society. So when the government comes in and says you can't raise rents, what happens? Well, several things happen. Number one, the quality of life of those renters continue to go down. And if rent control is ever taken off, which sooner or later it will because it'll be sued into oblivion, then those people will be thrown out on the streets. If we look just at a test case here in Southern California, in Los Angeles, there are so many renters that have under market rent and that are just living in their property. The second that it's lifted and it's probably going to go through the court system, then they're going to be evicted right out, and they're just going to add to the homeless population. Anytime you have rent control, you don't have as good conditions in that area. You have homeless, especially in LA. This all applies to Los Angeles. You have homeless population, crime goes straight through the roof. You're just a bad society, and that's what's happening in this blue state here in California. Go look at Los Angeles, go look at San Francisco. Once darlings of the United States are now dumps of the United States. Sacramento's turning into that way. Thank you, Gavin Newsom, and thank you for all the blue team out there that can't get their shit together. And it's caused all kinds of problems. Even candidates from outside of California are coming in and laughing at the train wreck that's here. Rent control, it begins with rent control and homeless populations that have not been addressed and just hurt the whole thing. We're going to continue to see the rental market's hot. There's not enough homes for people, right? And when there's not enough homes for people, then then again, the government, instead of subsidizing for real growth in the housing market, having builders build, what they do is they just spend money on the homeless and trying to get them in a better situation. But the better situation is if you added housing and then you turned around, especially low-cost housing, you have to subsidize it. Here in Southern California, a lot of builders are anywhere from $450 entry level, or if it's less, it's HOA madness, all the way to $600,000. You look at the home builders' average price, average value of their properties are over $600,000. What does this show? This shows that they are the ones that are making the money, and the government is sitting here, especially the state of California, who received hundreds of millions of dollars in 2021 to get bailed out, burned all the money, and now we're back into a deficit situation. Yeah, where'd that money go, Mr. Gavin Newsom? Rental market's red hot. Homeless market is even hotter because of that. Next. U.S. housing market can face two big challenges in wake of Silicon Valley Bank collapse, says Zillow. Now, this is very interesting. We've already talked about one of these issues. We're going to read it. I said yesterday or Monday, once it happened, you're going to see rates drop because the Fed now realizes they effed it all up in 2021 with calling inflation, as well as Janet Yellen and all the other politics, saying that it was all transitory. No, guys, stop spending money. You spent almost $10 trillion, printed $9 trillion in 2021, and that led to all of the mess that we're in. Called at that time The inflation transitory ran it all the way up, and now it only took, 18 months to see banks fail because of the complete mess that it's caused here in the United States. Now, let's go over the two things that Zillow's talking about. Could push mortgage rates down. I absolutely had said that Monday. It's causing it because they don't know what to do. The Fed has no clue to do. There's no question that Treasury Secretary Janet Yellen is completely clueless. And our beloved, I don't know if maybe that's not the right word, Mr. B is sitting there saying, oh, everything's okay. Well, you said that, 2 years ago, everything was okay, and everything's not been okay. It's actually been a complete disaster. Let's go to the next thing. 2, tech hubs should brace for more pain. Should Silicon Valley Bank collapse? Oops, there we go. Well, guess what? All those iBuying companies that are out there have already collapsed. In the greatest market of all time, you're looking at the biggest mess we've ever seen in technology, in real estate, and mortgage technology. It's been a complete disaster. VCs are getting wiped out. Even you guys who are putting money in those firms and those fund managers are getting wiped out. Open Door, you've been the worst of all time. You've never made a dime. You came out in the fourth quarter and lost $400 million. You lost billions of dollars, never making any money for anyone. You're the disgraced CEO, which was called the darling of Wall Street several years ago, is now the bozo of Wall Street. Put on the red hair and the red nose. You came up with a story. The technology was terrible. Everything was terrible. Well, where did that go? That went right down to Zillow, who decided their iBuying, their flipping of homes was a complete disaster. They got out of it after losing $1 billion. Redfin is the same way. They got out of it. Everybody's getting out of it. It was in the greatest market of all time. If you can't make money, then you need to go home, back to traditional real estate. No disruptive technology there, just a burn of cash for the stockholders, the VCs, and the fund managers who listen to these bozos and put money into it. So those are two things that have really crushed the market. Thank you very much. All right, here is a nice, beautiful picture of Signature Bank, and we see a line going out there on the side. It just again shows that we're just not in economic times. Banks, as you understand, they as of 2012, our government decided that they can use, or the Fed decided that they can use virtually all of your deposits and put it into whatever risky assets and risky investments they want to. That's what happened to SVB. That's why they collapsed. That's what happened to the other two banks. That's why they're collapsing. And now we're seeing Credit Suisse now have the same effect. We also just saw the downgrade here in the United States of 6 banks to almost junk status. Well, I know Republic went to junk status. They actually were doing home loans out there, but their rates were so much lower than everybody else's, and now they're just in complete chaos. We're going to find out what happened with U.S. Bank. I think U.S. Bank's in trouble too by portfolioing their own product, because they can make more money putting it into 1 or 2 year bonds than they can in 2% 30-year mortgages. It makes no sense. And when there's a liquidity crisis, what do they have to do? They have to sell those off for a loss. That's what Silicon Valley Bank did. They took the free money from the Fed, threw it into 1 year, 10-year bonds at 1%. And then when they had a liquidity crisis, that there's no such thing as a 1% 10-year bond anymore. It's 4%. So now they have to sell it and then take out of their pocket the extra 3%, which caused $1.8 billion loss and beginning of the windfall, or I should say the disaster of Silicon Valley Bank. We're seeing it all throughout the United States here, regional banks. But guys, let's be very frank and honest. All banks are using your money for risky investments, and that's why we're starting to see the movement of getting your money out of banks, and that's happening out there. It's becoming a movement. I'm thinking crypto is one way. People are putting money into crypto because they feel, even though it's volatile, that they can always retrieve their money. It's not being gambled away. All right, let's go look at rates. Rates bounced back a little bit yesterday. Looks like the conventional came up to about 8 basis points. 30-year FHA, about 6 basis points. But we saw a big jump in jumbo. Again, jumbo is extremely volatile right now. You have to pick the right loan officer on the right day to actually lock your loan in. If you do not do that, and again, I keep saying shop the rate on a daily basis, you will lose, and you will lose bad, costing you maybe $10, $20, $30, $50, $100 a month because you didn't shop that loan. Well, guys, thank you very much for joining me today. I'm on my rant. As usual, I just see that the government has done nothing but cause us more pain, inflation, and now the banking system is collapsing behind it because of their incompetency. That's how I feel. If you guys have a comment below, if you think everything's fine or you want to agree with me, leave it below. Otherwise, I will see you tomorrow.